What's up guys, Ben here and welcome to Motivation to Invest. Warren Buffett has been at it again, except this time he's not been selling, he's actually been buying. Buffett was previously criticised for holding a lot of cash, considering his famous saying is be fearful when others are greedy and greedy when others are fearful. Except during the March crash, he was actually selling a lot of his stocks, such as the airlines. However, the investments he has made in the past few months have been so surprising. So another one of his famous sayings is don't bet on America, yet he invested heavily into Japanese stocks. Now I've got a full video on that, so I'll leave that in the link below and you can check that out. Another surprising fact about Buffett is that he's always been very bearish on gold. He always states it doesn't produce anything, you're better off buying farmland. Yet, he invested into a gold miner, Barrick Gold. I've got a video on that you can check out. And then Buffett surprised many more people by investing into a tech company called Snowflake. That was even more of a shocker because Buffett has always been very bearish on tech companies. He doesn't really like to invest into anything he doesn't understand. And Snowflake is a complicated cloud stock. I've also got a video on that you can check out. But in this video, we're going to look at his latest purchase. So what's Buffett been buying recently? Well, let's get straight into it. He's actually invested over $600 million into a company called Scripps, which is a broadcasting company. Now, this isn't your traditional investment. Berkshire Hathway has committed $600 million to help finance a takeover deal, which would see Scripps buy out broadcasting company Ion Media to the tune of $2.65 billion. The investment nets Berkshire preferred shares of Scripps, as well as a warrant to purchase 23.1 million shares of the business, exercisable at $13 a share. Scripps is currently trading at around $11. So the deal looks like a win-win for Buffett. Either the merger goes through and Berkshire is able to exercise its warrant and pocket the free money, or it doesn't, in which case Scripps still has to pay Berkshire an 8% dividend on its preferred stock, which will rise to 9% if the TV station operator is not able to pay in time. Now, it can be difficult to get a great return in a zero interest environment. So Buffett obviously understands this, and that is why he is using his enormous cash pile to secure very interesting deals. So let's dive into the share price for Scripps. So Scripps is currently trading around $11 per share. It's had a very shaky run. The company E.W. Scripps is an American broadcasting company founded in 1878 as a chain of daily newspapers. And it was also formerly a media conglomerate. And we all know Buffett loves newspapers as he famously invested into the Washington Post. But this is a very interesting deal and it's just really to finance a takeover. So while we're on the subject of Buffett, let's dive into the numbers for Berkshire Hathway and see if that could be a good investment right now. So here we are on Stockopedia. We can see Berkshire Hathway is classed as an industrials conservative large cap super stock. Basically, in Buffett's own words, Berkshire Hathaway is like buying a cross-section of America. It has a variety of businesses and is the world's largest conglomerate. Businesses from insurance, to finance, to railroads, and many more. These are all sustainable, free cash flow businesses, which generally receive around 20% return on equity, according to the annual shareholders letter. As you can see, revenue here, 5.51% compounding annual growth rate on the revenue. So it is a slow grower. It's a gigantic company. It's one of the biggest in the world. Surprisingly, no dividend. Buffett likes to keep all this cash rather than paying it to shareholders, which I do find interesting. Obviously, he's looking for deals. He's expecting something to come in the short to long term. And that could happen. We all know that the economy is propped up with printed money and there's a lot of exuberance in the market. So maybe Buffett is right. Maybe he is right holding quite a bit of cash and just investing into these very specific high return deals. Analyst consensus. So we've got people here from Morgan Stanley. One hold, one buy. PE ratio 20.7. So that is a fantastic PE ratio. That's a great valuation for such a well-run business. This company revenue in 2020 is expected to be $147 billion in revenue. Now that is just crazy. Net profit, $21 billion for 2020. Now, This type of business, it's got so much free cash flow, it's unbelievable. And also an interesting thing I'd like to state about Berkshire Hathway, and one thing I do like about their style, even though I'm not really into a lot of the old school companies they're invested into, is I like the fact that they don't do share buybacks. Now, this is bad for investors in the short term, but in the long term, it means they can use that cash, such as more deals, such as the one previously mentioned. Now, if you look at a company like Apple, and I've mentioned these guys before, Apple have continually done buybacks, which is why they reached over $2 trillion in market cap. If Berkshire Hathaway did the same, you could be sure that their share price would double. And the value of the company is very strong at the moment. Really, Berkshire Hathaway is the type of investment I'd say, is if you had, say, a large bulk sum of cash, say you've just suddenly got a large bulk sum of cash and you want to invest it into a safe, well-diversified business, then Berkshire Hathaway is a good option for you investors. So that's today's video, guys. Let me know your thoughts on Berkshire Hathaway's recent investment, and let me know your thoughts on how Buffett has been acting this year, all the crazy purchases from Japanese stocks to gold. Let me know in the comments below, and be sure to check out my previous videos on Buffett. And if you guys found some value in this video, feel free to give it a big thumbs up. That really helps out with the YouTube algorithm, which allows me to create more great content like this for you guys. In addition, if you want more investing tips and exclusive stock market picks, which I personally have been investing into, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, I'll see you guys in the next video. Invest safe.